Nikhil, you guys have a very strong grip on the broader markets with a very wide coverage. How are your interactions with these institutional desks happening, especially in the last 2-3 weeks, particularly for a broader market? Do you see appetite coming back?
Thanks, Ajay. Well, we ourselves are advisors to several institutional investors, foreign as well as domestic. Clearly, if you're just talking of a 3 to 4 weeks view, the I think the general trend change is increasing allocation towards mid caps and small caps amongst institutional investors. Now one trend which has remained good for the last 3 4 months across institutional investors has been a large part of their money, including their money from small cap and mid cap funds, a large part of that allocation going towards larger businesses. But in the last 4 weeks or so, we are seeing that allocation towards mid and small caps is increasing. Secondly, cyclicals are back in play, wherein many of our investors are beginning to build up positions in cyclicals, and we have seen that, of course, in rally of several steel and mining businesses in India as well. And thirdly, I think a lot of bottom-up play happening across industries like auto ancillaries and pharma.
Let's start by understand also your view on the urban consumption side, because that was the area which we actually saw the biggest hit, be it parts of auto. Of course, now there was the numbers suggest some recovery. QSR clearly was very badly hit. What are your thoughts there? You starting to see some value there?
Yeah, I think, see, that's one area where we are seeing a lot of value coming up. Where we've of course seen the markets rally over the last 4 months, and led by primarily by a huge demand upsurge in staples across urban, semi-urban, rural market, and of course rural market seeing maximum flow of money, good crop, etc. So I think that theme has played out in our view. It will continue to be a secular theme. It is not that it is going away, but in our view, there are signs emerging within urban markets. When I talk of urban markets, what we are tracking is the top 10 cities in India, the metros and the other larger cities like Pune, Ahmedabad, etc. And within that, we are tracking themes like the mobility data, mobility of vehicles on the road. We are looking at credit card spends. We are looking at search trends online. We are even tracking some on-ground inquiries for things like real estate or for vehicles, four-wheelers, two-wheelers, and we are seeing that June has been a great month as far as the demand surge coming back, and July has, and every incremental month, July was much better, and August seemingly is looking even stronger. So in our view, urban consumption is a theme which is going to show some real numbers. In terms of auto numbers, in terms of real estate companies beginning to show some volume data starting from this quarter two onwards, and hence it's an important theme for investors to start building on. There are several companies who have started to talk about their data, whether SBI Cards has spoken about their June number in their earnings call, June data being 70% higher than what they had volumes in April and May, or numbers of Maruti and Eicher, who generate between 25 to 35% of their revenue from these top 10 cities. So this is a real theme which we believe is going to emerge post Q2, and investors who have a long-term view need to start building upon that theme at this juncture.
In fact, we are looking at stocks already starting to do well. The names like Tata Consumer you spoke about, because of entering into new categories, have already rallied 50-60%. The other area where we understand a lot of work is happening, we'll get an exclusive story also going shortly, that agrochemicals and APIs is where government is actually looking at some push on the Atmanirbhar mission side. but you also like specialty chemical APIs for the next 5-7 years. What's your hypothesis, and any names if you could share?
Yeah, see, we believe that in the changing global order, wherein companies are becoming more protectionist. They want to and of course that anti-China kind of theme is being played out not just in India but globally. Indian companies are going to do increasingly well in areas where there is a lot of R&D capability which exists within our companies, and clearly APIs, specialty chem, even ancillaries, auto ancillaries are themes where we believe that there's a lot of wind on the back of what Indian companies are trying to do, and even government is now incentivizing Indian companies to take large capex decisions. So in our view, this specialty chem, APIs, as well as ancillaries, these three are going to be a mainstay. They are going to be secular themes for the next 5 to 10 years. Within that, we like primarily companies who are doing exactly that, which is basically building their business around strong R&D, a strong product differentiation. So in specialty chem, we like companies in the fluorine chemistry. So we like companies like Gujarat Fluorochemicals and Naveen Fluoro. And within other specialty chemical bracket, our top pick is Atul Limited. In these businesses, we believe that there is going to be 5 to 10 years of secular growth. Their product mix are very sharp, and value-wise, you have a long way to go as far as generating this company is getting the fair value. Within APIs as well, we believe that some of the larger players are doing exceedingly well in their own niche areas, and we believe that companies like Dr. Reddy's, Ipca, and Laurus Labs are three businesses which are going to see some of the strongest earnings growth, product introductions, etc. over the next 3 to 5 years. So these are some of the names which we believe are going to be the biggest wealth creators in the next 5 years.
Right. Nikhil, you also see a case building for deep cyclicals, which may be trading at lower than their sector average right now, but there is a contra play available there, like say CVs or auto ancillaries, where clear recovery may be still far away. How strong do you see that case?
Well, deep cyclicals are a little tough to work with at this juncture. The data is not really pointing to huge recovery, at least in the CVs, for example. But ancillaries have a very different structure, clearly, Ajay. And that like for example, if you're playing a name like Endurance Tech, which is a very large auto ancillary company, you are actually playing on the two-wheeler space. The growth of rather than buying a Hero or a TVS, and or a Bajaj at about 25 times earnings, you can actually buy an Endurance at about 14, 15 times earnings. And you are actually playing that theme fairly efficiently. I think what's important here is in the deep cyclicals is the balance sheet strength of these companies, and clearly players like an Endurance, or to that matter even Mothers and Sumi, are businesses where you can take you can call that the balance sheet is extremely strong, and and it can hence stand the test of time, and as and when the demand surge happens, and the operating leverage in these companies will play out very, very strong. So hence these within the deep cyclical space, auto ancillary is one area where we believe that value is there from a short to long run, but only in businesses with very strong balance sheet strength and good product mix, wherein Endurance and Motherson kind of stack up the best.
Right. All right, Nikhil, I'll let you go on that one. Thanks very much for your time. I look forward to seeing you on the show a little more often from here on. Take care and stay safe.
Bye. Thank you.